Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. In the next step, the banana zone takes place. That's when things start to speed up. There are times when we drag up slowly and then start going. I believe that takes place. Now is the time for altcoins. Really crazy things start to happen at that point. The person speaking was Raoul Pal, CEO and co-founder of Real Vision. In today's clip, we'll see what Raoul thinks about the crypto market right now, where it stands in the cycle, and what he thinks will happen next for crypto. He missed a lot of what Bitcoin bros think, which is why we want to tell you about it. Let's go watch the video here. Cryptocurrency markets tend to be unpredictable. It's an asset class that has 70% fluctuation. It can go down very badly and go up very badly. As a matter of fact, it's the best performing asset class ever. But the best success also comes with a lot of ups and downs. In this don't fuck this up argument, I say not to take advantage of people. Do not try to trade or use fear of missing out to get something. To keep things simple, just watch what you do and use only the bigger tickets. If you're going to sink into something, do it in the smaller stuff because it's more likely to change. There is a very good chance that you will get it wrong, but you can also get 100x in the room. I know that appeals to a lot of people, but I want to keep everyone on the straight and narrow, and it always feels bad to see these drops. I've been doing this since 2013, and they never feel good. But the truth is that it's normal. You've probably forgotten about this because it's been a year, but this is the 5th or 6th 20% drop in Bitcoin. It's strange that you forget about this because you've dealt with it so many times before. Another really cool thing that Coinbase said in a tweet was that there have been 5 Bitcoin bull markets. Should you want to ride a bull market to the top, you'll have to get through the following: 6 drawdowns of 5% to 10%, 3 of 10 to 20%, 2 of 20 to 30%, 1 of 30 to 40, and 1 of 40 to 70%. That's all during a market boom. So you have to have a certain amount of guts to ask, has my thesis changed? You have to be able to turn off Twitter and your screens. Is this technology no longer being used? Does it have any other reason to slow down? What part of the business cycle are we in now? I spend a lot of time trying to teach you guys that this is a major asset that moves with the business cycle. Just like tech stocks, it looks to the future, and the cash side is what drives it. Has the business cycle changed in a way that makes us think the crypto cycle will fail? Well, most likely that's not a yes. That's why it's corrective price movement. Also, if you have some extra cash lying around, you can use these fixes to add. That's what I did. I had some extra money, so I added to my Solana position. Good. I also found that it worked really well over time. One important thing you can do to get better returns in this space is to use the downturns to your benefit, even the big ones that go through cycles. Last time I didn't run out of anything. I had no plans to do that. Didn't I miss the top or something else? I knew it would be hard to get back in. You can't add X sum back in after taking it out. You bet less because you don't wish to lose everything. Your whole mind is messed up. I like to say, well, this is a longer-term trade instead. I just want to add that when the market goes down a lot, you increase and get back to all-time highs long before the market does. That is a superpower. What's going on now? What's wrong with crypto? The same reason tech has been shaking. It's not about liquidity. As you may remember, I've talked about this code cycle many times. Those of you in Real Vision Pro Macro and even Pro Crypto, Kevin Kelly and I talked about it yesterday in Pro Crypto, that liquidity is the most important thing for all asset classes, but especially for crypto. Adding or taking out cash is easiest to do in this currency. Based on the liquidity cycle, I was able to correctly predict that the bottom would happen in 2022. The forward-looking parts of the liquidity cycle will last well into 2025. That means I don't need to worry about anything. Here are the numbers that show how much money Raoul likes to talk about. This shows macro spring, macro summer, macro fall, and macro winter. We are in macro summer right now, and typical macro summer things happen. A lot more money has been put into the market, also macro fall. The economy gets some more money pumped into it. Over the past 10 years, however, we haven't seen as much liquidity during macro winters and macro summers. He likes to look at this one along with how Bitcoin has done in the summer, fall, and winter. It's clear that Bitcoin does very well in the macro summer and macro fall. As you can see, when macro winter comes around, BTC really makes those big drops. To sum up, this only shows where we might be in the cycle and where we might be rising along with the altcoins and how they tend to do. In the chart below, you can see that altcoins tend to make really big moves to the upside in the fall and slowly start to rise again in the summer. Cryptocurrencies and Bitcoin could really make some good gains for the rest of the year and the beginning of next year. When you look at Us cash, you can see what's going on. As shown by the Fed's balance sheet, which they do every day. They've been tightening it, which makes it harder to get cash, but the government note and the draining of the reverse repo have made up for it. Along with the reverse repo, the other part of the equation is the Treasury General Account, which is the U.S. government's checkbook and is run by Janet Yellen. She has been building that up, but these have been the liquidity-based since 2022, and they've been going slightly higher. You learned from the everything code cycle that there is no way to pay off your bills. It's now a word that people use to talk about controlling money. This is the round of all the code. I began to talk about the everything code cycle 2 years ago. It says that if GDP growth is too slow, then the system's debt is too high. Either the interest rates need to go down, we need more growth. Now over time, growth is driven by population. And there isn't much we can do about it. You get growth cycles, but not the general trend rate growth that has been slowing. This means that the GDP has to cover the interest on the government sector's bills. That's 100% of GDP, and 120% of private sector debt is debt. That's why we don't have enough GDP to pay the interest. This is made a lot worse when interest rates are high. Right now, interest rates on, say, 2-year bonds are very high, while the trend rate of GDP growth is about 1.75% or 2%. Okay, and if you double that number to include the private sector, you get 10% of interest payments and a nominal GDP growing at a rate of around 5%. Because there isn't enough GDP, prices on bonds have been going up even though the Fed has been talking about lowering rates. This is what has been making the bond market crazy. For this reason, there isn't enough GDP growth. This is the round of all the code. This causes what is called more cowbell, which is a trigger that can come in a number of forms. That's why lowering interest rates is the most obvious thing to do. You've seen that part before. There is also a secret way to add money to the system, and quantitative easing is the most well-known example of this. The other one is taking money out of both the reverse repo and the Treasury General funds. That's about it for now. There are more to come, which I'll talk about in a moment. So where are we now? What was the point of the air pocket? Well, QT was moving on to their stock sales. Cash stocks were being built up by the Treasury because tax payments were coming in. They leave money market funds and go into Janet Yellen's bank accounts. Since she hasn't spent the money yet, it takes liquidity out of the system. It's just sitting there. By putting out short-term notes, she's been trying to help the market. The reverse repo is now empty. But today, another piece of news makes the markets change their minds very quickly. Another piece of news is that Jay Powell said, "Hey, we don't want to sell as many bonds." This means that we're going to loosen up on liquidity conditions, though Janet hasn't said yet that she's going to put out more short-term notes. The opposite repo is pretty much empty, so it's not really possible. She's going to wait until the election is near before she opens her wallet and gives money to everyone. That will happen in the second half of the year. That's more magic she did. She said, "I'm going to keep selling short-term bonds and buy back some longer-term bonds." These are the ones that are hard to sell, the off-the-run ones, but really, it's just reusing cash. Adding money to the system is what it does. Janet began to add cash to the system,